Good morning. Good morning. We are back with another trade breakdown. It's Tuesday. Yesterday's breakdown, as y'all can see from yesterday's video, was a big fat L. But today we bounced back with a W. And we're gonna show you. I'm gonna show you. I don't know who we is, but I'm gonna show you how I was able to win today. It was a pretty big win. It was a nice setup. It was a pullback setup that I like to use on NG just because it follows structure a lot. So let me stop yapping and show y'all how we won this trade. All right. So as I do every day, I'm gonna show you guys. I'm gonna break down from start to finish. You know what I mean? So again, at this particular point, you should know how I trade and my strategy by how I break down my charts every single day, right? Again, I have my strategy for sale, but if you did not purchase or if you do not want to purchase that, you should be able to look on my videos and see how I get into the markets, what I look for, how I enter the trade, what like my confluences is, all of that based off my breakdowns on these recaps. So pay attention very closely as I break this down. All right, so obviously I'm breaking down, or I go to the daily. I start off with a daily and I mark off my daily highs and my daily lows, right? So yesterday's candle kind of closed in kind of like this what you call this doji candle. And doji candles, if you don't know, are sometimes a signal of a reversal, right? Or of price wanting to stop at that point and continue in another direction. So for me, before I just assume that price wants to do this, I wait for confirmation on the lower time frame. So I have my daily highs and my daily lows marked off. Again, I go down to the 4-hour and I look at structure, right? All this little mess right here, let me show you. All this mess right here didn't do nothing for me. All right. Like, it doesn't tell me direction. It doesn't tell me what price is trying to do. So I have to wait for a little bit more confirmation on the lower time frames from the 1 hour to the like the 15-minute. Right. So I see that when I got into the charts around, let's go down to the 1 hour, around that 8 o'clock time. Well, I get to the charts around 7 o'clock. So we're here, right? This particular candle closes extremely bullish, and we took some sell side liquidity. So for me, after price takes sell side liquidity and we start to break structure to the upside, I'm looking for the nearest draw on liquidity to the upside, because that's where my target is going to be if I decide to get into buys, if it presents itself. So I see that price gave me a huge wick, taking out sell side liquidity and engulfing this particular candle here, giving me confirmation that we might want to start breaking structure to the upside. I don't want to get in a trade until we actually break structure. So once we broke this high right here, I mark that off as market structure shift, right? Which means we broke structure to the opposite side, and we could potentially, if we come down and hold, continue on bullish. And so that was what I was looking for. I also wanted to make sure that before I got into this trade that we didn't take that initial buy side liquidity out, so that I could have a point of interest or area of interest for me to get out at. So around right at that 8 o'clock time that I usually start trading, I see here that we pushed up like extremely fast, but we did not take this buy side liquidity up here yet, right? So only thing I'm looking for is an area of interest for price to come down into, and then a continuation buy up. If you look, there is a 15-minute fair value gap sitting right here, right? That came right after we had a displacement to the upside, right? So another one of my confirmations is displacement, and then that leaves a fair value gap, and then a retracement back to that displacement area or that fair value gap area to then continue to that direction. And It's as simple as that. This time it was on the 15 minute that we got it. It wasn't on the 5 minute, which is still beautiful. It just means we're gonna probably hold the trade a little bit longer. And you got to understand on the smaller time frame, a 5 minute or a 1 minute, what that looks like. So on the 15 minute, you can see that we got that market structure shift. We got displacement to the upside that initially broke this high, and then that left the fair value gap. Right now, it also left this fair value gap here. But why don't I use that one? Is because I only want to take a trade that's in a discount, right? Because we're buying, so that's in a discount or below the 50%, at or below the 50%. That's when I want to take my trade. I don't want to take a trade that's not in that area, because I know prices probably want to come back at some point. So it's not high probability for me. If you go from this low to this high, you can see that this particular fair value gap sits at that discount area. So that's where I want to take a trade if it presents itself. I went down on a lower time frame on a 5 minute, and we did get this initial push up, right? But for me, I have to see so when you're taking a trade on a higher time frame, on a lower time frame, you have to have a market structure shift. So even though the price did pull back, and then give me an engulfing candle, there was no market structure shift for me or any liquidity that was taken for me to know that, okay, price is ready to go to the upside. I have to wait, right? So all of these things are important when you're taking trades on a higher time frame, or when I say higher time frame, I mean 15 minute and 1 hour, right? If you're taking your entries based off those time frames and not the 5 minute time frame, then you have to wait for some sort of liquidity be swept or shift in structure before you can take your entry. For me personally, that's my strategy. So for me, I did not want to take this initial push up, because I'm like, price could easily come back down and take some sort of liquidity before it wants to come up. So, and the 15 minute candle hasn't closed yet. So one, I want to wait till that 15 minute candle closes here, right? I want to wait till the 15 minute candle closes and then see what it does before I just get in. And then two, because that 15 minute candle closed as it was coming down, I'm like, okay, we need some sort of liquidity to be swept and hold for me to want to get in. And of course, we want a bullish candle, because that's my strategy. Wait for a engulfing bullish or some sort of displacement to happen, and then get in on the break of that candle before I, go to my target. And as you can see, that's what happened. We had this small lower time frame sell side liquidity that was swept, right? And I if I were to get in here, I would have had a lot of drawdown, right? Knowing that I knew price wanted to either swipe some sort of liquidity or come down, break some structure to the downside before breaking structure to the upside, leaving us a market structure shift. So for me, I just waited. We end up getting what I needed to see. To me, this is A+, so everything aligned. We had that engulfing candle, and then upon that close, I waited till price broke that candle, and then it was history from then on. Normally, I would get out at some sort of liquidity, so sitting up here, but that's a little over my 2-to-1 ratio. I always want to just get out at that 2-to-1, because again, I took a loss yesterday. At this particular point, I want to secure profits, right? I don't want to hold longer than I have to when I started down in the beginning of the week. So for me, now that I'm back up, I could potentially hold a little bit longer if the liquidity is sitting in those areas. But today, I just wanted to, secure what I made on this account, and leave, like, I'm okay with that. This probably, I think I made 5,000 on this account, and this probably would have been about a 7,000, almost 8,000 day if I would have held. But that's not, after yesterday's loss, I'm just sticking to I'm sticking to my rules. I don't really care how far it pushes up at this point. So yeah, easy breakdown. Following my rules, like I said, I'm no longer gonna be doing that stupid shit like trading too many times a day. And I didn't even trade too many times a day. There was no reason for me to take another trade after I won. So today, again, I'm following my game plan, following my rules, getting out at a 2-to-1 regardless, until I get to the point where I have enough cushion to hold longer. But easy breakdown. I hope that helps. Again, Discord dropping August 15th, which is about a week from now. I'm excited for that. It is completely free, so I'm excited for to see you guys in there. I don't care if it's one person, I don't care if it's 50 people. I'm just excited to have a community that I could build with, that we could build together, and we can make some money together. So August 15th, drop of the Discord. Make sure you guys are looking out for that, and I'll see you guys on the next one. Peace.